The EFINA access to finance data, it reveals very big insights for policy direction and ecosystem coordination. From the EFINA access to finance data, you can deduce that there are three big challenges of financial inclusion in Nigeria. The first geographic challenge is the accelerated growth of digital identities in Nigeria that has not been commensurate with the growth of formal financial accounts revealed by the EFINA access to finance data. Formal financial accounts have been growing maybe 2 or 3% every 2 years. But digital identity in Nigeria has been growing at a rate of 10, 15 million every year. Formal financial accounts in Nigeria, the number of people with formal financial accounts in Nigeria will be probably best maybe 60 or 65 million today. So essentially, the access to finance data, reading that with other ecosystem data reveals that there's a geograph, a fundamental geograph between the accelerated growth of digital identity in Nigeria and the slow growth of formal financial accounts in Nigeria. The second geograph challenge is the accelerating growth of payment that is not translating to the growth of credit in Nigeria. From the EFINA access to finance data, former payments in Nigeria grew, access to payments in Nigeria grew in 2010, over a decade, from 2010 to 2020, from 22% to 45%. But within the same decade of 2010 to 2020, access to credit remained flat at 3%. So in essence, the growth of payments, of formal payments, is not translating to growth of access to credit. The third interesting insight in terms of access to finance data is the contribution of the non-bank players in terms of their contribution in terms of extending the formal financial rail. When we measure, when we do a comparative analysis of Nigerian access to finance data with other markets, let me illustrate this particularly with our data at Kenya. The bank's contribution of traditional players to access to financial accounts in Nigeria from 2020 data was 45%. The non-bank players contributed an additional 6%. In essence, fintechs in Nigeria extended the formal financial rail by an additional 6% over what traditional players have done in Nigeria. The comparative data in Kenya was that traditional players like banks extended the financial rail, built financial rail by 44%. Non-bank players in Kenya, the fintechs in Kenya, extended the financial rail by an additional 39%, bringing total formal financial accounts in Kenya to 83%. So when we compared 6% extension of financial rail of fintechs plus to the 39% of financial rail extension of fintechs in Kenya, it tells ourselves that fintechs in Nigeria will have a lot to do. How much of our resources are being spent focusing on the banked but underserved, those already banked by banks but they're underserved, which still needs to be served, versus focusing also on the completely excluded who are not banked at all. Are we having the right kind of balance between the two? Those are some of the very important policy direction and ecosystem coordination issues that EFINA access to finance data reveals.